Hey guys, all content discussed in this channel is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. Today we heard from the SEC chairman, and the things he said at the Global Exchange Conference were incredibly powerful and bullish for retail traders all over the world. Gary Gensler is looking to propose rules that would rein in payment for order flow, a very controversial practice where retail brokerages send customer orders to wholesale brokers rather than exchanges because wholesales execute the orders at a slight better price than the exchanges. Brokers also enjoy payments from wholesalers in return for customer orders. SEC Chairman Gary Gensler said investors might get better prices without payment for order flow if there was more compensation to execute retail orders. This is a major game changer for all trading, but in particular for meme investors. For months, we have known that many brokers send orders to market makers such as Citadel, who essentially take the money, issue the fake share but never really buy the stock on the exchange. It has been a very contentious topic for debate in the media, but I am glad the head at the SEC agrees that this practice is incredibly uncompetitive and harmful for investors. Gensler said he has asked his staff to recommend rules that could require retail brokers to submit retail orders to an auction process, whereby each market maker would transparently compete for a retail trade based on the best price offered. He is also looking for a series of reforms which include setting a market-wide minimum pricing increment that all market makers and exchanges would adhere to. As of right now, stock exchanges can price stocks to the penny while market makers can offer prices in much smaller increments, which provide them a huge advantage. Big shout out to Gary Gensler and the team at the SEC. I don't agree on everything they make or do. I find their constant dismissal of meme investors incredibly cringe and out of touch, and their informational videos very superficial. But credit where it's due, because this is a huge home run for us retail traders. Nothing has happened yet, but it is good to know the direction in which Gensler plans to take the SEC and markets. Diverging from this, Fed GDP tracker says the economy is on the brink of a recession. A closely followed measurement from the Atlanta Fed suggests the economy could be headed for a second quarter decline in gross domestic product. Remember that the previous estimate showed the economy grew 1.3% on June 1st, and now trackers show the economy grew at an annualized pace of just 0.9%. Recessions are technically defined by 2 consecutive quarters of negative economic growth. Falling income, slowing retail sales, negative or low GDP growth are all marks of a recession, and so far, we are meeting the quota pretty well on that part. Markets began recoiling back today, with all 3 major benchmarks ending the day red. No particular news came out from GameStop nor AMC. Today, I alerted to various stocks to enter. 2 in particular stood out, with both of them running well over 20%. I also released the new option alerting bot, which has proven to be very effective in calling out great alerts on 15 commonly traded stocks. Link is in the description if you want to check it out. Let's talk about today. The Fed submitted over $2.140 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 60% of the total volume today, while dark pool trades for GameStop accounted 58% of the total volume today. AMC had a bullish performance, gaining over 3% for the day. It opened to a quick run. It jumped from 12.80 to 13.60. It managed to break that resistance wall a bit later, eventually running to 14.09 before dipping back down and closing at 13.52, above the VWAP. GameStop had a bearish performance, losing over 5% for the day. It opened to a quick run from 140 to 148. It managed to break this resistance wall later in the day, running to 153 before dipping back down to 136. It bounced a bit, closing at 138.73, below the VWAP. Come and join my Discord for more content, the link will be down in the video description. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.